Welcome back. We talk a lot about the semiconductor industry right here on Making Money, and the multi-trillion-dollar industry is central to our interconnected world, as well as many of our portfolios. That's less heralded are some of the components that go into making these chips. My next guest brings deep insight into this all-important supply chain and where the U.S. stands in its ongoing battle for global economic supremacy. Randall Atkins, welcome, founder, chairman, and CEO of Ramaco Resources. It's a metals and mining operator that is now expanding into the exploration for rare earth minerals. Their ticker is METC. Randall, let's just start with a big picture overview. What is a rare earth metal? What are these critical minerals? Are you producing them? Are you processing them?
So, a couple of questions. So, rare earth minerals are found very prevalently throughout the world, but they're in low concentrations. So what we have found out at our site in Wyoming is a wide collection of almost 50 different types of minerals. But the most prominent that we'll be producing are things that are frankly used in the semiconductor industry. Things like gallium, germanium, high purity alumina, high purity silica, things of that nature, which are primarily used in the wafers for semiconductors.
So our phones, our humanoid robots all need these critical materials.
All the things you've been talking about this afternoon.
And China owns that market. At least that's what our last guest, Sylvia, said.
China owns the robot market.
Because they own the supply chain for it.
That is correct. And what they've done over the last 30 years in rare earths is develop a very sophisticated supply chain, primarily within China, where they have created the midstream business, or the refining part. That's the tricky part that the U.S. hasn't solved yet. So we opened the first new rare earth mine in 70 years last year.
And where is that mine?
That is in Sheridan, Wyoming.
Okay. So that's the second mine in the United States for these rare earths and minerals.
Since 1952.
Wow. And what are you doing now attached to that mine, the Brook Mine in Wyoming?
Right. So we opened the mine last year. We did production to a pilot level, which we can use for testing purposes. We're building a pilot plant now to test those minerals as to how they can be processed, separated, and refined.
That's a big deal.
It's a big deal, and it's an expensive deal. And so we will do that for about another year, and then hopefully start the refinery, which will take about 2 years to build. So we'll be hopefully producing commercial quantities of these critical minerals by the end of the decade.
Do you have customers lined up?
We have signed several MOUs with various customers, several of which we just announced yesterday.
Can you share?
Sure. There's a company called Indium, a company called Bedrock, and one of the things that we're exploring right now, interestingly, is using e-waste into our refining process, as well as PVC. So e-waste from your old phone would be ground up and then fed into the refinery along with our feedstock to enhance the realizations of what we were able to produce.
What is the cost of production for you?
Cost of production will be relatively low compared to most rare earth and critical minerals. Why? Because it's found in coal.
Oh.
So most rare earths are found in hard rock minerals, and they're radioactive. Coal is softer, and it's not radioactive. So as a result, we've got somewhat of an ideal feedstock from a somewhat unloved commodity. And then when we add that with potentially e-waste, that enhances the concentration levels that goes into our refinery.
What do you need to see to scale up at the mine and then eventually at the plant that processes?
The real issue on scale, we have almost well over 100 years of mine life in this one site. So our scale is whatever the market demands. So it's really a market-driven question.
Okay. We've already seen big U.S. tech companies pour hundreds and hundreds of billions of dollars into data centers and the build out of AI. How much pressure does that demand put on a company like you? Is it pressure or is it opportunity? How do you see it?
I think I view it more as opportunity. There's no real pressure. We're trying to basically go through a fairly methodic calculus to create the refinery, which is a multi-billion-dollar industrial complex. So the demand factor of that is enhancing as time goes by. 5 years ago, we wouldn't be having this conversation about AI and data centers, and now it's exploded. So that is a strong demand push for what we're doing.
Yeah, what is the next conversation you're going to be having? And who is it with? Is it perhaps with the government?
We have been in discussions with the government.
Okay, because we want to own this sector. Because China is currently, we're making advances and chipping away at that market share, but they're the winner right now.
China has definitely dominated the market, and there's really become a buy market. So the sense is you've got a Western market and you've got a Chinese market. Different prices, different customers. Last spring or this spring, I was in Japan. That's an interesting market that's developed, a lot of uses for rare earths over the decades, and they're now being basically shut out of the Chinese market.
Yeah. I'm looking at your stock price, ticker METC. It is down 35% this year. Why do you think that is?
It's generally fallen into the same path that most of the other critical mineral stocks have. If you go back and compare it to the peer group, it's down pretty much across the board.
Okay. Randall, thank you for coming on.
Thank you so much.
And I'm encouraged by what you're doing. I think it's great news. It's great news for our country. We appreciate it. Let's do a quick check.